Welcome to Steve Savant's Money, the name of the game. Hi everyone, I'm your host Steve Savant, syndicated financial columnist and money gamer extraordinaire. Today we're talking about life insurance policy review with policy expert and certified financial planner, Sam Roque. Welcome to the show, Sam.
Thanks, Steve.
Sam, I'm talking about policy review. And everybody says, well, Steve, I don't even know what I have. Well, that's why we need to do a review.
Right.
This is all you do. It's so funny to see a certified financial planner so narrow in this field. I mean, this is all we talk about. So you do over 1,200 policy reviews a year. That's unbelievable. And you have a full-time staff of at least 6 people looking at this all the time.
Right.
Walk me through, why do I even care about this? Because I thought I said it and forget it.
Yeah, unfortunately, Steve, a lot of policies have gotten to a place where they just have underperformed, and they're projected to lapse. They're projected to go away. And
now, what does lapse mean for a consumer?
Effectively, it means that the policy it hasn't been funded sufficiently to where the policy goes away.
But I thought we had a premium, and I thought that was the premium we were going to use.
Yeah, and unfortunately, a lot of products 10, 12, 20 years ago were sold based on assumptions, and those assumptions have changed. And it's not the fault of the consumer. A lot of people don't understand that if they pay their premium, their policy can still go away.
Well, there's products. We have so many different products. It could be participating whole life, or current assumption universal life, or index universal life, or variable universal life. There's so many formats.
Right.
You look at all these product lines, but I also noticed that you look at medical issues. Now, why is that so important?
Right, because frankly, medical underwriting has changed a lot in the last 10 to 15 years. And frankly, the industry has made a lot of improvements to where underwriting, which drives most of the pricing of your product, has gotten better. And so a lot of clients are able to get new underwriting to better price their products.
So that new pricing then would help these policies that you said lapse or maybe fall apart later on in life. It actually can extend that coverage.
Correct.
But I also noticed that some of your policy reviews that you actually can reduce the premium the client's paying and save them some money.
Yep, in a lot of scenarios we're able to reduce or eliminate the premium entirely. And in a lot of scenarios we're able to do so on a guaranteed basis if you prefer.
Now, I like the word reduce, but you just said a big consumer word, or eliminate. Is that true? You see a lot of this?
Yeah, absolutely. We do a lot of that because people say, "Oh, you know, I've paid for this for 15 or 20 years. I would much rather use that premium to fund my lifestyle, to take an extra trip every year, or to contribute more to my retirement accounts. I don't need as much life insurance coverage as I had. You can get me the same amount of coverage, or sometimes we can even get them a little more with no premium." And so we're able to provide a lot of value while also giving them the flexibility going forward to divert that cash flow elsewhere.
Well, I love that, because most people, if they're like me, and I'm buying life insurance just to protect my family or my business, or maybe even having a charitable intention, I don't want to pay any more than I have to. And you just told me I might, depends upon the client, depends upon their medical condition and what the policy did perform, but I might be able to reduce my contract and maybe even eliminate my premium.
Correct.
Well, when I'm thinking about this, I also noticed that you brought up several points, and you said, you know, Steve, people have life event changes, and sometimes they forget about who the original beneficiaries are, and those beneficiaries may not necessarily be the ones you want on there. Talk about that.
Yeah, so there's a study that policies over a certain age, about 20% the beneficiary was either a divorced or deceased spouse. So a lot of scenarios we see the beneficiary is somebody who it really shouldn't be, and either the policy owner just hasn't really thought to change it, or they didn't remember that they'd had this policy out there. And so there are a lot of scenarios where the beneficiary of a policy is somebody it really shouldn't be, and that needs to be reviewed.
I noticed something else you brought up. You said that sometimes a consumer, a client, can actually not only better themselves in their position with their life insurance policy, but now they're adding on these ideas like long-term care. Talk about that. That's kind of strange.
So products aren't what they used to be. They're a lot better. They're a lot more flexible and unique, and there's a lot more value in them than they used to be. It's not just death benefit. A lot of contracts now offer some long-term care benefits where you have a death benefit, but if you also need long-term care, you can accelerate that over your lifetime to help pay for those long-term care expenses.
Now, it's not a long-term care policy per se, but it has supplemental features.
Correct. So you can get benefits for that, but if you go through your entire life and never you need long-term care benefits, your family is still going to get the benefit of those premiums you paid in form of the death benefit.
I noticed also one that caught my eye was this chronic illness. There's also embedded chronic illness provisions on some of these new policies.
Sure. So some of those riders are free. So some of them have free benefits that you can accelerate the death benefit. It does cost on the back end, and it's a little bit more uncertain. So a lot of times we're recommending that you do pay for it up front, but occasionally, it is definitely a benefit to have it rather than to not.
When we come back from the break, we're going to talk more with Sam about some of the processes and some of the medical information you're going to need to share with a medical technician. We'll be right back. It's not how much money you make, it's how much money you keep. And keeping more of your money is even harder these days with high taxes, fund expenses, and fees for financial advice. And when you consider the uncertainty of the market and the rising cost of living, the purchasing power of your dollar is constantly at risk. But a tax-deferred annuity with an inflation rider can be the most cost-effective way to generate increasing annual income without market volatility. For more information on how annuities may work for you, just email me at steve@thenameofthegame.tv and ask for our free annuity information. Well, welcome back to our second segment. Of course, we're with Sam Roque, a due care and due diligence expert on policies. As a certified financial planner, I've never seen anybody just in this arena. Pretty narrow. But you own this, and you're one of the nation's top experts in this. I want you to walk me through. I'm a consumer. I want to save money. Sounds like you sold me on the first segment that this is a good way to go. Now, I'm going to get a call from my advisor who's going to introduce me to this person you call a medical technician. Talk to me about that.
So Steve, underwriting is one of the biggest pieces of getting life insurance. A carrier wants to know that you've got a certain health history.
They have to get blood, urine samples,
exactly.
attending physician statements.
Exactly. And so what we want to do is we want to make sure that process is as smooth and as seamless for you as possible. And that means we need to get a lot of information ahead of time so that we are setting your expectations correctly for knowing what the pricing is going to look like. But we're also going to want to make sure that we go to the right carrier and get all of the right information at the start, so we don't have to come back to you and explain to you that your premium is 10 to 15% more than we thought it was going to be, or come back and say, well, we need this clarification from your doctor, or we need to get this test now or that test now. So we're going to set you up with a call to where you're going to speak with one of our technicians, and they're going to run through a number of medical questions with you. And it's helpful to have any lab work that you've recently done, that kind of data, have as much medical information as you currently have on file as possible.
Prescriptions as well?
Prescriptions, you're going to want to have a list and the amount of the dosages. You know, depending on what specific things you have going on, we're going to need to ask you a baseline level of questions and then all the appropriate follow-up questions to some potential issues to make sure that we get you the right place, the right way, and preferably the first time.
You said something that caught my ear. You said with the right carrier. Are you suggesting that certain impairments or diseases or maybe some medical condition I may have, that there's a carrier out there that's more benevolent than another carrier?
Absolutely. And Steve, I'm going to give you the most basic example we have. Tobacco chewers. There are almost every carrier on the marketplace is going to say, if you chew tobacco, we're going to give you tobacco rates, which are 15 to 20 to 50% more expensive than non-tobacco rates. But we know that there are 3 carriers on the market that have looked at that risk and they say, we're okay with it, we'll give you non-smoker rates. So if you go to one of those 3 carriers, you're going to get the absolute best pricing on the market.
My thought is
and that's easy.
Baseball players are chewing all the time.
Or if you smoke a cigar on the golf course, or you know, maybe smoke one a week.
So tobacco would be an immediate place to look, because you have carriers that are much more, well, for lack of a better word, forgiving.
Correct. And it's very easy, and it's really important to be as upfront and honest with that as possible, because they have their ways of knowing about how much you're really doing it, and they're pretty good at finding that kind of thing out. So the more information we can get like that up ahead of time, the more beneficial the process is going to be, and the easier it's going to be for the consumer.
So if I hear you correctly, when I go through a questionnaire as a consumer, I'm listening, my medical technician has called me. They're walking me through this Q&A, this questionnaire. When they're done, they have a very good idea who the actual carriers that they'll show this to see what kind of underwriting offer you're going to get.
Correct. So typically at the end of an underwriting review, we're going to have a very good idea of who the major players are going to be.
This sounds almost like kind of the eBay for life insurance.
Mm-hmm. Right, it is. It's a shopping mechanism, and some carriers have said, okay, we're willing to be priced well in this area and not in this area, and so it's up to us to know what those niches are and to fit you into the right place to get you the absolute best result.
This is one of the big reasons on our show from a consumer point of view that I want to deal with brokerage companies that have a huge plethora, a big inventory of carriers. We don't have one flag to salute from, so we're looking at several carriers. In this case, we have almost 80 of them, but really in this area of really impaired risk and diseases, there might be a good 20 to maybe 24 carriers that are really playing this area, and everyone may have their own niche. It's amazing to me because we're looking at the same information, but people take risk differently.
Correct.
Okay, now, so let's say I went through my medical. Now, those medical technicians are going to turn it over to product aficionados, people that are experts in product lines based on the carriers that you think you're going to use.
Correct. So we're going to get a really good handle on underwriting first, and we're going to say, okay, here are the carriers that you have to work with, and then it's going to go into the hands of a product specialist who's going to, first of all, just truly analyze the existing contract and say, what does this look like, and help educate the consumer on what they have, what it looks like going forward, what some risks are, what some things they might do to improve it, to make it a little bit better. And then that product specialist is going to say, okay, from here we're going to look at the market and we're going to say, is there a better alternative out there for the consumer? And a lot of times there is, and we'll help give you a really good, thorough comparison that the consumer can understand, to help guide them in their decisions so that they understand what they have, why they have it, and that we get them the best possible solution, the best possible result out of what they have.
The leading reason to do this? Saving money. It's a huge opportunity. That's all the show we have for today. I want to thank Sam Roque for being my special guest and today's Money Mentor. And before moving forward with any of the ideas on our show, always consult your tax advisor and legal counsel. And as the good Reverend John Wesley once said, make all you can, save all you can, give all you can. I'm Steve Savant. We'll see you next week.